with JPMorgan kicking off earnings season for the big banks, reporting a beat on both the top and bottom line for those second quarter results, with adjusted earnings per share coming in at $3.78, beating estimates by more than 60 cents. Those estimates were $3.15, according to Bloomberg. Now, for those earnings per share results, they did benefit from $3 billion in credit reserve releases, which resulted in a 75-cent per share benefit in the quarter, and also revenue beating expectations, coming in at $31.4 billion, topping estimates of $30.06 billion. Now, Jamie Dimon in his commentary did point out that the consumer balance sheet these days remains exceptionally strong, while the economic outlook does continue to improve. And going back to those reserve releases during the quarter, the bank reported $11.9 billion in net income, which was up $7.3 billion from just a year ago. And again, those credit reserve releases of $3 billion was what was driving that, compared to the buildup that we saw last year. $22.6 billion in allowance for credit reserves firm-wide. That has to do with kind of their outlook, or I mean, they do have a better economic outlook, but also just remaining, being diligent as they go ahead here. When you look further in the results, though, the trading revenue, there was a lot of talk in recent weeks about the more normalized environment when it comes to trading. Did see trading revenue, total markets revenue, decline 30% to $6.8 billion, with fixed income revenue falling 44%, while that equity markets revenue did climb 13%, which is pretty much in line with what we've heard from the street. Meanwhile, banking revenue rose by 1% to $5.1 billion, with investment banking also up 1% at $3.4 billion. They did talk about on the earnings call the pipeline, the IPO activity remaining quite robust. Myles?
And Julia, another bank that we saw results from this morning, Goldman Sachs, also talking about their backlog. They beat on the top and bottom line, but like JP, a little bit light in some of those FIC categories.
And I think that was kind of going to be the consensus here as we have a more normalized trading environment. We certainly saw that, I go back to just a couple of weeks ago, Jefferies, which was kind of a bell providing some insight as to what the trading might look like. But the story here for Goldman Sachs certainly is the investment banking, which posted its second best quarter ever with $3.61 billion, and also talking about that, by the way, that accounted for 24% of total revenues. But that backlog for investment banking transactions was significantly higher than at the end of 2020, and it ended the quarter at a record level. But again, as you're mentioning, the global markets revenue falling 32% from a year ago to $4.9 billion. With FIC dropping 45% to $2.32 billion, while equities declined 12% to $2.58 billion. So a little bit lighter here on the trading side, but again, a beat on both the top and bottom line, with adjusted earnings per share of $15.02, revenue of $15.39 billion. Myles?
And we see shares there trading higher. Goldman had been lower initially after those results hit the tape about an hour and a half ago. All right, Yahoo Finance, is Julie LaRoche with the latest on JPMorgan and Goldman Sachs kicking off first quarter earnings season.